Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today I'm just going to briefly go over a 5-minute market report, just as we're all in suspense over what's going to happen with Jerome Powell and the U.S. Federal Reserve to see if they have an increase of 50 basis points or more. 50 basis points is probably priced into the market. We've had quite a dip here. And, I think 75 basis points and definitely anything over that would probably send shock through the market. You can see we are just kind of hanging on by a thread. This is a very sloppy chart here. I wouldn't really have too much confidence in this setup without knowing everything else that's going on in the market, right? So again, like if we go ahead and put on our EMAs, we can see that uh, we're losing the 89 on the weekly, and that's not a good thing. So we're coming down to that last resort, that 100, which is kind of that kind of wick zone that we've been playing with. We were using the 89 MA down here for our wick zone as well, but really we're starting to lose support and sooner or later we may have a capitulation. And the strongest support, at least by an EMA's theory, would be the 200 underneath it, whether it's the 200 EMA or the 200 MA. And that's going to be talking, of course, about those mid 20s, those mid 20,000 ranges. If we get front run, maybe 30,000, 28,000. If there's just something very traumatic in the market, then maybe, even lower than, 22,000, lower than that, which is theoretically possible, just highly unlikely, but it's possible. And we also have to consider that there is the possibility that we don't just move in a straight line. Of course, nothing moves in a straight line. It's possible, we get some kind of bounce and then, something like this, right? So, without further ado, let's go ahead and take a look at the stocks really quick because we want to see what type of environment we're in. And if we go ahead and jump over to the NAS 100, we can easily see that we have lost our 89 on the weekly. And if I go ahead and show the levels that I'm looking at, again, like we're at risk at another 10% to 50%, 15% drop on the NAS 100. And although we are reclaiming some levels, it's not really great support here. What you can see is that we did recover just enough to have some hopium that this is going to act as support, this is going to act as support, and we're right there. So if we can just hold this area, there's the possibility that we could have, some kind of bounce. Who knows how high it would go, right? So it depends upon the news from the Federal Reserve, but we might get some type of bounce. And if it just makes a lower high, like unless the Federal Reserve really saves the market, which that's not their intention, their intention is to fight inflation, then it's just going to be a lower high, and that's just going to indicate more likely more down in the market, and we might just have some type of delay of getting down to these type of levels. Do you see what I'm pointing out here? So whatever your opinion is, I mean, unless the market just suddenly becomes healthy, which it doesn't look like it. If you look at what's going on in Europe, if you look at what's going on in China, if you look at what's going on in Russia, and then you think about the inflation in the US, then all of the major, areas of the world where all this macroeconomic activity really overlaps and either supports or diminishes each other are all in kind of conflict right now. Policies are divergent all over the place, and it's really a mess. Okay, it's really a mess. You can't point the finger at any one country or any one cause right now. It's really just everything. It's just everything. And so, what I would suggest is, getting yourself, having your plan for the downside. Even if you're bullish, have your plan for the downside just in case, because whatever this drops, whatever these stocks drops, it could be up to two times on the Bitcoin chart, right? So Bitcoin could hypothetically drop as much as 20 to 30% more, assuming that stocks find support around this 200, which is where they usually find support. It's a good bet, okay? And let's see, if we look at the other indices here, we have the Russell. Russell has lost their 89 a long time ago. That ship has sailed. They've actually come down to their 200, which is astonishing. And if they lose this, if they lose their 200, which by the way, this is not strong support here. If they lose their 200, they're coming all the way down here. So, lots of pain on the Russell. Lots of pain on the Russell. It hasn't been easy for these guys. And if you have any portfolio in the Russell, you probably feel that pain. That's, you know, let's let's pray for the Russell, okay? And here we have the US 100, of course. Same thing, right? So let's see and again, yeah, you guys can see this. We're starting to lose the 89s. We're finding temporary support in these type of previous accumulation areas, but in general, we still are under the 89, and we haven't been recovering these levels. All these levels used to be green; they're all red now, right? Like as I've been going over this stuff throughout the months, these used to be green levels, and now they're all turned red, and we're looking down lower, right? So it just doesn't look good. Let's go ahead and jump to the volatility because we did get a little bit of a reprieve today, and that was kind of hinted at yesterday. So we do see a little bit of reprieve. Anything above this orange line that I have marked out is really trouble for the markets. It's just so much volatility that they can't stand it, and it just people flee the market. But in this kind of zone, there's some regular trading, and really we want to be down here. We're not in a safe area at all, and this could potentially even continue to push up. Same thing for the other volatility indexes. They're just hanging around that kind of hellish level. Not good stuff. Yeah, we see the Nasdaq volatility is pretty high for its relative levels, so not good, not good. And then, of course, so we did see some type of bounces on Nvidia. Apple reclaimed a key level, a really essential level. I mean, this I think brought a little bit of more confidence to the market because this was a big one to lose. If Apple had lost this level, this 150. If it had lost that yesterday, the markets would have been panicking. But Apple is doing what Apple does, and it's kind of hanging on there, which did boost confidence. Tesla also had a bounce. Tesla was in danger of coming back to these areas, but this bounce does help bring a little bit more confidence. Of course, all of these names, Tesla, Apple, Nvidia, some of these big names, just like Bitcoin, they're going to hang on until the end. And it's not going to be until the rest of the market really starts to collapse that they really go for it down because just like Bitcoin, it just depends. Like, how much do you love this asset? How much do you want to be holding this thing? And people love Tesla, they love Apple, they love Nvidia, they love lots of these names, and so they're going to hold on to them until the bitter end, even while the rest of the market is going down, until it's just so painful for them that they have to give it up. And I think Bitcoin is actually acting in a very similar way, which is good news for Bitcoin. Because even if we look at these patterns that I've uh, pointed out, where we have the possibility of a, Wyckoff redistribution going on here, we can see that actually the holders continue to hold. Right? They continue to hold. And while I can hypothesize that we have more down to go, just based upon the redistribution schematic, we're not going down until holders, Bitcoin holders decide that we are allowed to go down, right? Like we can't go down until they decide to sell. And right now they're saying like we like this level, probably based upon, accumulation at these levels over here, right? Because this was an accumulation. This was a Wyckoff an accumulation schematic over here. And so if you accumulated here and you're still holding, then probably these are levels that you want to hold. And so we're going to have to see more pain in the market. And it's just like Tesla, it's just like Apple, it's just like Nvidia. We're going to have to see more pain in the market before these guys are going to give up their coins. Now, the guys who bought back here, back in 2020, they have no problem getting out, right? They have no problem taking their profit. But this is a lot of the market, right? Even these guys right here, this is a lot of the market that wants to hold on to their coins, and they're fighting for these levels, right? They're not going to give it up easily. So although Bitcoin was falling the fastest in the beginning, right? Because a lot of these guys were taking their profit, once we reach their buy territory where they bought in here, it's just slowing down. And now we see that stocks are actually falling way faster than Bitcoin. And so that gives the chance for a little bit of a bounce in the crypto market. You probably see alts kind of bouncing at these levels. It's just because this is kind of a negotiation point. This is a max pain, just where the buyers and sellers are kind of at a stalemate right now. And so some of those alts that, have really been needing, some, just some space to breathe, they finally have that. And however, if this level does break, then we are going to be reaching those areas where these guys are going to be getting terrified, and we might see them panic sell their coins. So stay tuned and keep your eyes open for that $37,000 level. And then, of course, approximately 35,000, 34,000, because we could be going lower if the rest of the market, the stocks, decide to go lower as well. In terms of what we have going for us, because there is the possibility still to pump. We're gonna want to be looking towards breaking this falling wedge. And let's see if I can just get a lower time frame on. We're really going to be having to look for that 39,000. $300 level. That would be a very bullish signal, and you would probably want to be in this trade for some type of a bounce. Of course, we are at support, so if you're taking some trades, as long as you have your stop losses, we discussed this in a previous episode. Don't be too bearish, but also don't be too bullish, okay? Don't get cocky on either of these things. We're not 100% sure what the Fed is going to say tomorrow. And just to wrap it up, again, if the Fed comes out and says 75 basis points plus, probably there's going to be more pain in the market, okay? If the Fed comes out and says 50 basis points plus, and then they have just a really sloppy, like crappy, media session where they hint at more pain in the market, probably we're going to be keep going down, okay? If they come out and say 50 basis points and then, hint that, maybe they're going to help the markets later on, then, potentially we have a chance for a bounce. And if it's just like 25 basis points, then definitely expect a bounce. But we don't know what's going to happen yet. We can't, just foresee the future. They keep those things under tight wraps. And so, all right, guys, that was your alpha for the day. Stay safe and keep a lookout for that Jerome Powell meeting with the Federal Reserve. And, happy trading.